Okay, we are in Mindy Options Academy, and I wanted to go over some raise and trade options here with you. Here, I'll take off the phone. There we go. And yeah, so some background on us. My partner Blake Mize and I, we met a few years ago in an options trading group, and we found out we both have the same passion for trading options. And so we decided to, make use of that passion and teach others how to do so. So we know you can make a great side or full-time income doing this if you so choose to pursue it that way. And it's just a great tool, a great investment in yourself. Learn how to do this. It can just open tons of doors for you and lead to all kinds of things. So I know a trader who actually he lived here in America and moved to Sweden for a year, just because he
Mhm.
could, because you can kind of do this from anywhere as long as you have internet connection and know when the market's open and everything like that. So you can really do it from anywhere. So yeah, and then just dive into the document here. Um, Minimize that. And then, so why trade options? Well, you get a downside and upside protection, or you can hedge any position. So yeah, if you have a position that is bullish or makes money if the stock goes up, then you can hedge that. So if the stock tanks goes down, you can hedge yourself and limit your losses quite a bit there. And the same if the stock goes up really high and you have a bearish position on, you want the stock to go down, then you can hedge both sides there. And yeah, so flexibility. Options aren't stationary. So you can put on a position at $50 on the stock. Say the stock is $100. You can put on a position at $50, and you can move that position up or down. And at some points, you can even get paid to move the position. So it's pretty crazy. You can basically get paid to lower your risk, is how that works. And yeah, it gives you a wide array of strategies to utilize. We'll go into that later on. The way we trade is really low maintenance. Every day varies how much time we spend on it, but I wouldn't say we really ever have to spend more than a couple hours trading a day or maintaining our accounts and everything. So yeah, it's a very low maintenance strategy. It's also very profitable, and you can profit no matter what the market does. So if the market's going up, down, sideways, you can profit either way. So that's a great thing there. Be able to trade on margin. So that's essentially when the broker is letting you have extra capital to trade with, put trades on and everything. So there's that. And use volatility to your advantage. So if there are big moves in the stock or the market, you can profit off that with options. Yeah, an extra source of income you can do from home. So you don't have to ever leave your house doing this. I know some people that lost their job during the pandemic and they knew how to trade options and they decided to do it full time, but I guess they kind of had to do it full time at their job, and they were able to stay afloat and do okay because they had this extra source of income to support themselves with, and use that to pay their bills and just pay their rent or mortgage, whatever they had to pay. This helped them do it. So, and you can also be completely wrong and still win on the trade. So that's great, because when you just buy a stock outright, you only have a 50-50 chance of winning on the trade because either the stock goes up or down, and you might win or lose. So yeah, only 50-50 chance, but you can make your chances much higher with options of just 50-50 to make money off of. And yeah, like I was saying, have the ability to put on high probability trade with a solid profit. So yeah, I'm going to show you how to do all this just here in a bit. All right, let me make sure. Okay, Tisha joining me here now.
Oh,
Hey,
yeah.
there.
I'm here twice.
Are here twice.
Okay,
All right. So you had everything with the trade options document?
yeah, should I hang up on the cell phone? I can see it.
Oh, yeah, sure. Should be good to go.
Okay. Okay.
Okay. Bring up document here. So here's a spreadsheet. Let me hide all this right here. Yep, so I just wanted to kind of show you an idea of kind of returns you can get trading options. So we like to shoot for 5% a month, and a lot of the time we are able to achieve that goal. It just depends. Every month is different, but a lot of the time we are able to achieve our goal of getting 5 to 7% per month. So if you start out with $2,000 in capital, which is the minimum required to have a margin account or the amount needed to trade options, Just here are some numbers here. So if you able to make 5% every month, starting in January and just going all the way down, your total yearly gain will be $1,591. That's right under $1,600. And this is including if you left all your gains, your account didn't make any withdrawals throughout the year. So as you can see, you actually get pretty close to 100% throughout the year, because of $2,000 you made almost $1,600. So that's pretty crazy. And then we're going to go to $10,000. Same thing. Just do the math, and you're going to make right under $8,000 right there throughout the year. So yeah, same thing, almost 100% for the full year right there. So it's quite amazing. Same thing, 25,000. You're going to make right under 20,000. So if you break that down into four fifths, or right about 80%, right under 80% right there for the full year, if you left all your returns, everything in the account. And then 50,000, you make right under 40,000. So yeah, that's quite amazing and pretty crazy. Able to make some great returns doing this. I don't know anything else you can make that great of a return in that amount of time. So yeah. Are you able to hear me, Letitia?
Oh yeah, I can hear you.
Okay, great. Let me know if you have any questions over any of this stuff too. Be interactive with this. So okay, but yeah, you got the spreadsheet numbers and everything here, Letitia?
Yeah, I can see them.
Okay, good. Make sure you got that and everything. All right, let's dive into the real stuff here. So this is my paper trading accounts. This is not real money or anything, but pretty much every broker will give you a paper trading account where you're able to put on trades, not using real money, but just to practice and everything, so you can get good at whatever type of trading you're trying to do, whether it's options or just trading, buying and holding stocks or whatever you're trying to do. You can essentially practice for free with these paper trading accounts here. Okay. So I'm going to give you a crash course in this options chain here, Letitia. So here on the left side, we have the calls, and that's always going to be, calls are always on the left side. That never changes. We got puts over here on the right side. That's always consistent as well. Right here in the middle, we have the strikes, or where we put our positions on at. This is also like the price of the stock. So the stock Coinbase is at 278. So if you put on a position here at 220, this is where you do it right here. Okay. On the put side, and on the call side over here, if you want to put on a position at 300, you do it right here. On the call side right here. Okay. Does that make sense, Letitia?
Yeah. Uh-huh.
Yeah, I know it's a lot to take in all at once.
Yeah.
it can be a lot to absorb. But yeah, this is an options chain right here, and we're looking at the stock Coinbase. You can see it right here, looking at Coinbase. And so one of our favorite trades, especially when we're mentoring others, Letitia, we like to demonstrate what a put spread is. Okay. And a put spread is a bullish position. In other words, it makes money if the stock goes up. But with options, you can also make money if the stock just kind of stays where it's at, or also if it goes down a little bit and just doesn't go down to where your position is. So essentially, you have three different ways you can make money off a put spread. If we bought this stock, we'd only have one way we can make money if the stock just went up, essentially. So yeah, so I'm going to show you what a put spread is here. This black part of the option chain is out of the money, Letitia. And then this kind of purplish bluish part is in the money. Okay. So we have out of the money, in the money. When you're trading options, when you're selling options, you want to be out of the money. So you want to remain in this black area here. Okay. Does that make sense, Letitia?
So you said when it's out of the money?
Yeah, this is the black area right here, out of the money.
Okay.
And that's where you want it to be for your position. For that, I'm going to show you here for a put spread. Okay. All right, so we're going to go over here and some things we like to look at. Like look at the charts, of course. Just click on the chart here to get an idea of what's going on with Coinbase here. So it's a fairly new stock, so not a whole lot to go off of. But as we see, it had a big jump up from about 235 to 30 here, went all the way up to 280, 290 just about. So I'm going to do that. Okay, we're gonna go back here. Then another thing I like to utilize, one of the main things to utilize, Letitia, is called the delta. And the delta is a measure of your risk at that point in time. Okay, so right now the stock's at 278. Okay,
Where does it
so
say 278?
right here, you see,
Oh, okay.
yeah, that's the stock price currently that closed at today. Okay, so yeah, that's the current stock price, and we like to stay around the 10 to 15 delta, Letitia. So right here where it says 10 to 15 delta, we like to stay in that range of our trades. Okay,
Mhm.
and the reason for that is, so the way you get the measurement of your risk is you're going to subtract the delta from 100. So you're going to subtract 15 minus 100, and that gives you 85. So at this point in time, Letitia, you have an 85% chance of making money on this trade if you place a trade right here at 230. Okay.
Oh,
Then if you're going to go to the 10 delta, 10 minus 100 is 90. So you would have a 90% chance of making money on this trade. Okay. All right. And then another thing we like to look at too is called the standard deviation. That's right here. So the standard deviation is currently 45. And what that means, within the next 44 days, so we're about 6 weeks out, we're about 45 days on from expiration for this option, about 6 weeks out. So in the next 44 days, it's expected to move 45 points. We don't know if that's up or down, or 20 points up, 20 points down. Nobody knows what's going to happen tomorrow with the stock. But we do know at this point in time, the standard deviation is $45. So the stock is expected to move either $45 up, $45 down, or a combination of going up and down during the next 6 weeks. Okay. So what we like to do is we like to subtract 45 from the current price. So if you said it was, for easy math, 280 minus 45, that's 235. Okay. So that's
mhm.
right here. Then we're going to subtract 2 because it's 278. So we'll subtract 2 more. So that's 233. So from what we can see here, it looks like a good position, a good price per position on that is 230 here, Letitia. Okay. So I'm going to click right here. Oh, and also the bid right here. See where it says bid, Letitia?
Yeah, I see it. Mhm.
Okay. That always means sell. It never changes. Bid is always sell and ask is always buy. Okay. So sell, buy. Bid is sell, ask is buy. Okay. So we're going to open our position here at 230. We're going to click on the 230 put that we're selling right here. Okay, we're going to click on that. Then I'm going to come over here and I'm going to click on the 220 as well for our position. Okay. And so now, Letitia, we have a 10-point put spread on. It's 10 points because we're going from 230 to 220
Oh, it's 230.
to 220. Yeah.
Oh, 32. Oh, say that again.
Going from 230 to 220.
Oh, I see it. Okay.
Yeah, so that's a 10-point spread. Okay. And each point is always worth $100. Okay, each point is always worth $100. So if you have a 10-point spread, the amount of money it costs for this trade on is $1,000 because you're doing 100 times 10. Okay,
Okay.
so yeah, so it costs $1,000 to put this trade on. Then we can go over here to see how much money we're going to make on the trade, $1.30. And what that comes out to when you minus the commissions is we're going to make $128.70 on this trade. Then you subtract that because that goes into your account no matter what. No matter what happens, you keep that money right there. Okay.
So is that part of the 5% profit?
Yes. So that's part of it. Yeah. This is one individual trade. But yeah. So we're going to subtract the 128 from how much it costs to put the trade on, which is 1,000. So now it essentially only cost $870 to put this trade on. Okay. And when you do the math, if you do 1,000 divided by 130, that gives you, I think, about 11, 12%. So you're able to make, Letitia, about 11 to 12% on your money, 6 weeks time frame. This is just off one trade. So imagine you had 2 or 3 on or more at one point in time. You'd be able to make, if you were to multiply that by 2 or 3, that'd be 260 or 390 or 400. You'd be able to make $400 in just about 6 weeks time frame right there. or sooner. Sometimes trades come off sooner if you're able to take them off early. So that is that's one of our favorite trades called the put spread. Okay.
Mhm.
And at this point in time, Letitia, you have an 85% chance of winning on this trade. Okay. If the stock goes up tomorrow, then your chances of winning will increase because the stock is farther away from your position. Okay. If the stock comes down tomorrow, then this deductible will go higher and the chance of making money will decrease. But that's okay because we're about $48 from at the money, or $48 away from this. So that gives us plenty of room for the fluctuations in price. So if it goes down $5 tomorrow, we'll be fine because we're still $43 away. If it goes down $10 tomorrow, we're still good because we're still $38 away. Okay. So yeah, so it's quite amazing. You're able to make a great return, 11-12% on your trade, and 85% chance of profit. Isn't that quite great?
Yeah.
Yeah, and that's just one trade. So imagine if you had three, 4, 5 on it at one time, going all on at the same time. Be pretty great return there. So yeah, this is one stock I'm going to look at, and I'm going to show you some different price stocks here because I want to show you when you're trading a put spread, it doesn't really matter what the price of the stock is. When you're buying a stock, it matters what the price of the stock is because you can only afford so much, right? So this stock is 278. Now we're going to look at another stock here. Look at Tesla. Okay. And same thing. We're going to go 44 days out. So these numbers here, Letitia, they represent how far away you're going out on this trade. Okay. So we're going 44 days out. Same thing. We're going to want to stay around that 15 delta there. All right. So if we click on that, do another 10-point spread. Okay, we're going to make almost the same amount of money. So last one was $1.30. This is $1.27. So it's pretty similar in terms of the return you're going to get from put spread, which is great because you're still getting about 11% return on this capital you're putting up. And it's the same thing with you. So it only costs $1,000 to do it. Since your losses are capped too, the most you can ever lose on this is $1,000. But we teach you in our program through Media Options Academy how not to take losses like that or anything. We'll teach you how to adjust positions and fix them when something goes wrong, to where you're able to steal and make a profit on them. So yeah, it's the same thing here. So you would subtract the 125 minus the 1,000. So essentially, the trade only costs you $873 instead of 1,000 because no matter what, this 125 goes into your account. So yeah, so this is Tesla, and then kind of the same thing. So we're wanting to be at least $94 away from the stock price. As you see, it's 707 right now, so we're actually more than that. So we're about $112 away from the actual stock price. We could even go here if we want to 600, or even 605 really. And that's what I just did. Okay, I already did that. So, but yeah, so same thing there. 10-point spread will give you about 11% return on that money there. Okay, and it only costs $1,000 still. The cost for the trade does not go up, and your risk doesn't go up either because you're having that put spread on for 10 points. All right. The same thing. We're going to go to a very, very large cap stock and one of the heaviest traded stocks, Amazon here. I'm sure you've heard of Amazon before.
Oh yeah, yeah.
Yeah,
I buy from them all the time.
Good. You'll make their stock price go up.
Oh yeah, well, as much as I spend.
Right. Yeah, so I've been watching Amazon for probably the last 5 years or so, how its stock moves, and it rarely gets below 3,000, but at some points it has, and it usually kind of mostly stays in the range from about 3,000 3,600. Okay. So it's in that range right now, and it typically doesn't get below 3,000, but every now and then it will. But yeah, so if we put on trade here all the way down at 3,020 though, we have a great chance to profit on this trade. Okay, because like the standard deviation is 218 and the stock price is 32.92. So if you subtract 200, that's 3,092. minus 18, that's 82, minus 8. So you're at 3,074. That's all the way, about right here. Okay. And if we stay down here, we have a great chance of making money on this trade because the likelihood of it coming up this far down is not very high. Okay.
Mm-hmm.
So we're going to do the same thing, Letitia. We're going to put on a 10-point spread and get just a little bit less than the last two trades. So we're getting 130, 127. Now we're getting 115. You can also move this around if you wanted to. You can go here and do that. So, okay, so now we're getting more for those two trades. So we're put on just a little bit more risk. We went up 10 points to 30, 30, 30, 20. Okay, so we went that 16 delta. Then another way too, something else you can do is you can make it 20 points wide. As you see there, now you're getting $250 for this trade.
But is it more of a risk, right?
Yeah, because since you're 20 points wide, it costs 2,000 to put the trade on, and your max loss would be 1748 there. But your risk is still really low though because you're only at a 16 delta. Okay, and if we subtract 16 from 100, we have an 84% chance of making money on this trade right now. Okay. So right here is 84, right here is 85% chance. And if you were to go down here to the 10 delta, you'd have a 90% chance to make money on this trade. Okay, all that makes sense?
So you don't want to go below negative 15.
Yeah, yeah. That's the way we teach our students. We want to stay between that 10 and 15 delta because it gives you a very high chance of winning on that trade, making money on that trade, and also you still get a good return at those levels as well. Okay. But like I was saying earlier, so options aren't stationary. All right. So say if we put this position on at 3,030, 3,010, we can actually move that position around. We can move it up. We can move it down. We can move it to a different expiration. So we can move it out to 65 days here if we wanted to. If we needed to get to a better spot than it's in right now, we can adjust it. We can move it out 21 days or 3 weeks. And yeah, so it's just, you give so much more flexibility with options than you do with just buying and selling stocks. It's just pretty crazy the things you can do with them. You can just always move your position around. You can even get paid to do it sometimes. You can, if you roll it out in time, you can get money for doing that. And yeah, it's just pretty crazy. All the different things you can do. I don't want to overwhelm you too much, but yeah. So yeah, do you have any questions about that, about the option chain or anything, Letitia?
So this platform you use, and I notice, is Think or Swim?
Yeah, good question. So this is through TD Ameritrade. That's the broker we use and that we teach through. They're at the top when it comes to options trading. They're one of the top brokers that trade options on. They've also got a great support staff. It's open 24/7. You can always call them if you have any questions or anything like that as well. So yeah. But yeah, any other questions about the options chain or about a put?
It's a lot.
Yeah, I know it's a lot to take on. It's kind of a crash course. If you were to join the program, we'd break things down a lot more in depth and go a lot slower too than kind of throwing it all at you at once. But this is when we do the consultations. You kind of understand how it works and everything. You get an idea of what we do and how we teach.
So it looks like you take a profit every 44 days?
Yeah, so it just depends actually. So we take our trades off early. We don't leave them on to expiration. So a lot of times the trades are taken off in like a month. So in like 30 days or 35 days.
Oh, so you have to keep an eye on it pretty much frequently.
Yeah, you definitely want to monitor your accounts, but you're able actually to put in an order that takes the trade off for you for a profit. And we do that at 75% profit typically. So,
Oh, okay.
Yeah, so let's just, for easy math, say, the trade brought in $100. What we would do is we would go in here and we would put on, it looks like this. I'm doing the opposite of what I did earlier. So I would go here, take it off at $25. I would do that, and then I'd put good to cancel. And once I send this and put this on, I don't have to do much besides watch it because this will take it off for me, Letitia.
Oh, okay.
Yeah, and you want to do that because when you take trades off early, it lowers your risk a whole lot, and you're still making almost a full amount that you make on the trade anyway. But
Mhm.
also, say Amazon shot up $100 tomorrow. Well, then your trade will be worth a lot less, which is what you want because you would already make a lot of money off of it. Say went up $100 tomorrow, $100 on Friday too. Well, then this trade down here will almost be worthless, which is what you want because you'd be up probably 50, 60% of the trade already. And so then when it takes your trade off early for you, it could take your trade off in 2 weeks. Then you've made 75% of whatever that amount was in 2 weeks, and that's happened to us before.
Mhm.
It's not uncommon for that to happen. I mean, if you time the trade right and everything, which we teach our students how to do through our academy.
Mhm.
But yeah, so you could make that $252. You can make 75% of that in a couple of weeks, in 3 weeks. We've seen it happen in like a week or a little bit over a week, 6-7 days. So yeah, whenever you time things right and you line the charts up with it too, yeah, typically the trades it takes a lot less than 44 days to make the money on the trade that we're trying to make on it.
Oh,
Yeah, but I'd say on average it's about a a month, a little less than a month, like 25 to 35 days is typically how long our trades are on before they get taken off for a profit.
oh, okay.
Yeah.
So how long did it take for you to master options trading, to
Good
understand
question. I mean, I
everything?
don't know if there was a one certain point. I would just say like I made leaps and bounds at certain points. Like I'm still learning every day. I'm a professional options trader myself, and I've worked with professional traders. I'm in communication with them a lot, and I learn from them almost every day too. So I'm still learning. I still want to get better at it every day, and just continue to progress and grow as a trader. But once you get this down, I mean, honestly, like it's life changing. I'm still in real estate now, and I'm in the process of getting out of real estate. Once I,
Oh, wow, that's great.
yeah, but once I got option trading down, though, it just kind of took a huge. I felt this huge sense of relief because real estate's unpredictable. You cannot close anything for months. But since
Right.
I had this monthly income coming in from options, I
Mhm.
wasn't worried about it as much. I was much, just much more relaxed and not so financial. Wasn't near as financially stressed as I was before.
Mhm.
Because yeah, I had a monthly income coming in consistently from options, and I had real estate, coming in too. So it's a
Right.
great combination. And the way we trade and the way we teach you to trade isn't very high maintenance. We don't day trade. The way we trade, you don't have to be sitting in front of the screen all day every day. Like yeah, you definitely want to monitor your account. Check in on it, 5-6 times a day, but that just takes a minute or two. But we don't trade where you have to be sitting there staring at the screen all day every day. We don't like that, and we don't think that fits us well. So we don't do that. We yeah, like I said, we typically go 6 weeks out, 45 days in our trades, and because of that, our trading style is low maintenance and doesn't require you know um, 8-hour days in front of the screen or anything like that.
Hmm. Oh, oh, okay.
Yeah, and I know a lot of traders too who got this down. I was trading down there to pay off, a lot of debt, a lot of student loans.
Well,
Yeah,
that's what I'm trying to do.
yeah, and this is a great way to do it. Because it's a great another income that some traders do it part time or full time, or they keep their day job and do this just to have more money coming in. And because once you get down, it's honestly it's life changing. Yeah, it just changes everything. If you're able to keep feeding your account, if you're able to keep building your account up, then yeah, your returns get greater and greater with the account side as well. So then there are all different kinds of things you do with margin too, um,
Uh-huh.
where you're able to basically use the broker's money. So you're able to basically use TD Ameritrade's money to put on more trades and make more money for yourself too. But yeah, we teach our students that as well whenever they join the program. But
Oh, okay. So this is an like a school, or how many students do you have?
we've got a few, but yeah, so we're an academy, like Many Options
Academy?
Academy. Yeah, so what we do is we've got a few different options that our clients can select from, and how depending on how often they want to meet monthly. And then yeah, so we teach you step by step from the ground up. We even show you how to set up your account with TD Ameritrade here. We show you how this platform here works. This toss, Thinkorswim or toss as they call it. We show you how all this works, and yeah, then we start you off paper trading. paper trade and not roll money first. So there's no risk on the table. And then once you get this down a little bit, typically after 2 or 3 months, then we'll get you into live trading where you're trading your real money. You can start making real money too.
Oh, yeah, that's the goal, huh?
Yeah, that's always the goal. So yeah, that's what we do. We meet with our clients multiple times a month, 3 or 4 times a month, and just show them how to do everything. Then we're
Oh,
also
you do face-to-face calls like we're doing
yeah
now, or?
yeah
Oh, okay.
yeah, like through Zoom or Google Meet, just whatever. It doesn't matter. And then also what we do is, if our client puts a trade on with, and it's going against them, then we make ourselves available to be for like 911 calls or penal calls to fix a trade or adjust it or something. That we make ourselves available for that too, to show you how to fix that trade, or it can still be a profitable trade for you.
Okay.
So because yeah, there will be times you need some extra assistance. We make ourselves available for that too as well. So yeah, we do that. We give you book reading suggestions. We give you different websites to look at and use, get information on. Oh, okay. Yeah, and then we send you videos we make as well. They're just kind of step-by-step videos on how to trade and how to just learn better and everything. And we give you lots of resources to be able to learn this at a really. It's up to you. You can learn at a really quick pace, or go a little not as quick. It's just up to you how much time you want to put into it and everything. But we give
Mm-hmm.
you tons of resources. We meet with you, weekly or biweekly, however you want to do it, whichever package you select on how to
Mm-hmm.
do that. But yeah, that's what we do. Take someone with it doesn't matter if they have no knowledge of the stock market, of finance, of like stock finance vocabulary. It doesn't matter if you know nothing about finance or stocks at all. That's fine. That's actually how a good amount of our clients are. They don't have any knowledge of it at all. So we bring them in and we build them a foundation of how the stock market works, how stocks work, and yeah, then teach you how to trade options on top of that.
Okay.
So you can really just do it, get to where you're able to do it well, and yeah, this is a skill you can use the rest of your life. It's not just something you can do for a little bit or every now and then. You can do it as much as you want. We trade every day, and we love doing it. It's our passion. We love to teach others how to do it too, because when you get this down, yeah, like I said, it can be life changing. You can do amazing things with this. So
Yeah, because from what I read about options, people said, I mean, even my financial planner, because I asked him about options trading, he said, that's so hard. That's just too hard. It's too risky. And
yeah, so it sounds like he doesn't understand it. But yeah,
mm-hmm.
like I just showed you, the max amount that you can lose on this trade is $1,000, right?
Mm-hmm.
But you can make it smaller than that too. Um, I just thinking of Airbnb, so I'll show you. If you do this, your max loss is 500 minus 39. So yeah, your max loss is only 460 if you did a trade like this.
Mm-hmm.
It depends how wide your spread is, Letitia. So yeah, if you do a 5-point spread, your max loss is only 500 minus whatever you make on the trade. Um,
Okay.
so yeah,
Yeah.
but most people that say that, they don't understand options. And yeah, you'd be surprised, but most financial planners, yeah, they don't understand options because yeah, it is complex. It does take time to learn it. It takes effort and time. And yeah, a lot of people just aren't willing to put in the time and effort to do it. I have friends that are financial advisors too, and they don't understand options at all. They have no idea how it works or anything like that. So
Yeah.
so yeah.
Um, yeah, I listened to one person on YouTube, and he teaches like stock and classes, and he mentioned a strategy of hedging your options or something. There's a way he's
Yep.
hedging his options where either whether direction it goes, he gets some kind of profit.
Yep. Yeah. Exactly. And we show our students how to do that as well. Um, yeah, that can be called an iron condor or a strangle, which are
Okay.
which are some things that we do, like with that we trade in our account. Also, we have our own volatility investment fund as well, where we take on other investors' capital and we manage and grow that for them through options trading. Um,
Oh, okay.
and yeah, I've been doing that for a while now. But yeah, those strategies are mostly through the iron condor or the strangle, and we use those strategies all the time as well.
Mhm.
So yeah.
Mhm.
But yeah, then here's just kind of some quotes that we like to to show our potential clients. So if you think education is expensive, then try ignorance, or
Okay,
try not.
both are expensive.
Yeah.
Uh-huh.
Yeah. So try not knowing what you're doing and see how more expensive that is. Then the best gift you can give to yourself, I guess I missed gift right there. The best gift you can give to yourself is to invest in yourself. Another one. And then, yeah, if you invest in yourself now, you can reap your rewards day after day, after month, and year after year. So basically, the rest of your life.
Hmm.
It's just great things to think about too, because yeah, I mean, when my business partner and I first met, we were being mentored too, and we had to pay a monthly fee to learn this and everything. But we were willing to invest in ourselves and put in the time, effort, and money to do it, and now it's paid off, tenfold or more. It's paid off like crazy. So looking back, I'm extremely glad I made that investment in myself and my
Hmm.
business partner